Hey everyone, this is Rayce Robinson with Mid-Florida Mortgage Professionals.
And Jorey Blackmer with Mid-Florida Mortgage Professionals. And today we're coming with you guys to give you a February 2019 update to let you guys know what this year was looking like compared to the exact same time frame last year.
Kind of Central Florida by the numbers here. So let's take a look. How did we do in February, Jorey? What's the sales numbers here?
Yeah, so the sales for 2019 in February, we were just above 2,400 sales. Compared to last year in February of 2018, we were at just over 2,500. So we are about a very small decline, which is a good thing. That means that we're not seeing a steady slowdown like a lot of people were predicting.
Yeah, I was looking in 2017, we did 2,400. So it's pretty much stayed about the same.
100%.
And then the inventory's creeped up a little. There was 7,700 homes on the market February of last year, and now there's 8,100. It's really not a big change, which is kind of what has been reflected in the news. The market's still strong. There was how much of an increase was there in the median home price since last year?
There was a 3% increase on the median home price. Currently, the new average home price in Orlando is $235,000.
Okay.
So it was a little bit lower back in 2018.
Perfect. And so, if you were putting a 5% down on 235, which most people in that price range are probably putting a lower down payment, maybe a 5 or 3% down payment. Mm-hmm. You're probably looking at 16 or $1650 a month payment for that kind of price range with principal, interest, tax, and insurance. That's kind of the average for the market.
100%.
And then that average is going really fast. Anything on the market, I'd say between 235 and 300,000, it's gone like that.
It's getting picked up very quickly.
So cool. So what are some things that you've noticed in the market here as of late?
Some of the things I've noticed in the market is there's a little bit of a shift. It's not in a negative way though, but I've noticed that a lot of buyers are they're either extremely hot and they're ready to go, or they're taking their time and they're wanting to see what's going to happen with the market because of things that they may have heard on the news outlets or radio. But regardless, the numbers don't lie. We do see the numbers. We're everyone's still consistently selling homes at the same rate as they were last year a little bit. So that is something I have seen on the market is that, we still have our hot buyers. We're still selling like crazy, sure. But we have seen a little bit of pullback because of what they've heard on news outlets and so on and so forth.
Yeah, there's some sentiment all over the place, we're the YouTube generation, we say, and there's, people are predicting all kinds of stuff. Fed saying the economy is super strong, that the real estate market seems to reflect that, so we'll see kind of what happens as we go on here. I do notice some lenders tightening up some guidelines as far as ratios. Ratios determine how much you can buy, mm-hmm. and kind of on the lower credit scores, like with FHA, where maybe ratios up here, they kind of pulled them back a little bit, but that's more in interest of kind of responsible lending.
100%, yes, exactly. Before we were we've always been, after the crash, it was extremely tight. We leaned up a little bit on them. Conventional goes up to a 50% debt to income ratio with qualifying credit. But now we're starting to see, like you said, FHA pull back on some of those, what they were being leaning on the lower credit score. It's more risk to reward for those lenders.
Yeah, and cool thing for me, I don't know how many father-son teams are out there. Of course, Jorey's my son. I've been doing this for 18 years, so I've seen all kinds of markets. I always say it's easier to buy or easier to sell. Kind of market shifts around. As far as when the best time to buy or sell, it's impossible to time the market. So it really just depends on your situation. Because right now, rates are really good. Mm-hmm. That keeps the payment really low. There's more probably loan programs than there have been in a long time. Mm-hmm. We're doing 3% down programs, 5% down programs, but really all kinds of ways to help people get into a house fairly inexpensively.
We have we even have preferred MI. That's something that I think we're one of the only lenders that when we're competing against others, we get worksheets. Our mortgage insurance is lower, by a significant amount. It's a massive percentage. So that's, not only do people have to look at those interest rates, that, interest rate does affect the payment, but something that will heavily affect the payment is something like mortgage insurance as well.
Perfect. Yeah, so that's kind of by the numbers here, and kind of piggybacking on what Jorey said, we don't use gimmicks, we don't use tricks, we just give you good, honest mortgage advice. If you're talking to another lender, we love to compete and earn your business, give you the best deal on a mortgage possible. But we also we more partner with you all through the process, from the very beginning, helping you with the credit, helping you with all the different loan programs that are available, making sure that we're setting up the mortgage, and as brokers, we don't actually work for a bank. You know, we work for the buyer.
100%. Yeah, the buyer is sitting in the driver's seat the entire time. I like to envision us as more of like a navigation system. How do you get to the end route to be able to buy your home? Right?
Nice. Yeah, so if we can navigate you through the process, please give us a call. We'd love to help. Our contact information is below. Have a great day, and we'll talk to you guys soon.
See you later.
Bye-bye.